Morning all, how are we all doing? Happy Thursday today. Happy Thursday, Monkey, Jury, Travel, Evil, Rodrigo, Neo, Paul, Figinia, how are we all doing? It's Thursday. It's PMI day. Busy day today. So we'll see what happens. I'm just watching the indices this morning closely at the open because first PMI release is 8:15, which is Euro. Then we got 8:30 for the second one, and then obviously 9 o'clock is the combined. So I'm just watching cautiously this morning because I wanted to see if there's any volume, and there isn't. So I'm cautious about trading this morning because obviously we're going to just get a move on PMIs, and I don't want to be hedged. Okay, I'm in the DAX. I'm going to trade it anyway. Always dodgy when you have news releases shortly after the market open because they don't tend to want to put volume in. So it obviously causes potential whipsaws for the first 15 minutes of the open. But anyway, I'm long. So long DAX. We'll see what happens. Morning, Roger. Morning, Mumo. So, morning, Mark. So, yeah, be careful this morning with the indices. Beautiful day on the indices yesterday. Another grand plus day yesterday. Long on the FTSE as well. So, every single one hedged yesterday. So, hedged on the DAX. Pushed down into support, exited the short, out on the aggressive exit. Same with the FTSE. Hedge was there, so it went long, didn't quite get to target. Target was a bit further up than that, but didn't quite get to target. Hedge short, exited there. Both of these two exits here, both of those TPs were in exactly the same spot, but my broker triggered one of them and didn't trigger the other one. So it's a good job I noticed it because obviously I was only in half the position. So obviously it didn't trigger the aggressive exits because there was a short on. So the logic basically is if there's no shorts trigger the aggressive exit, there was a short, but only one. Should have triggered both. But it's weird because we got that price point, but I didn't get a fill on both of my orders. So I manually exited the second one and then the aggressive went in there and exited that. So that was a nice quick, well, not, it was fairly quick exit. NASDAQ, same thing. That was a quick, easy one as well on the NASDAQ. So got hedged there. Quick exit on that one. And the same with the Dow. Bit of a longer trade on the Dow. Hedged, exit, aggressive, out. So all four yesterday, beautiful exits, which was lovely. It's nice to get hedged on all four and then actually come out with a big, big day. So, yeah, nice day yesterday. For the indices, bit whippy, but obviously nice. Not going anywhere today at the open. So the opening range is very small this morning. No volume, as you'd expect on PMI day. So what we've got today is PMIs all day long. So it's the... they call it a level of diffusion index, but it's the purchasing managers index. So it's basically a leading indicator which tells us what purchasing is being done within business, within industry. If they are buying more stuff, it means they are producing more stuff, which typically means demand is up, which is good for the economy. So bull numbers tend to be good. Bear numbers tend to be bad. So we get the French at 8:15, the German at 8:30. Then we've got the orange one there, which is the Eurozone. The Eurozone is made up more than 50% between those two, which is why we focus on the French and the German. The German and the UK are the second biggest economies in Europe. The biggest economies in Europe. So when that one comes out, basically you kind of know what that's going to be. So we get move typically off of one, and then we get another move off the other. If both moves go in the same day, you tend to get an ADR. So potential for big movement off of that. It's the third day of BRIC Summit today. Then 9:30, we've got the PMIs for the pound. Then we've got unemployment for the US at 1:30. And then 15 minutes after market open, so the same situation this afternoon, 15 minutes after market, we get the US PMI figures. So these are released strategically after market open so that it drives the market, basically. So be careful this afternoon. You'll probably find low volatility at the open until 15 minutes in, and then it'll obviously take off. So just be aware of that today. We've got Bailey speaking again this evening. We had nothing out of Bailey yesterday. I was hoping we were going to get something decisive about directional bias from Bailey, but we didn't. As you can see, there's just nothing there. So no clues further as to what we're doing with this pound. We've hit the inflation. We've overshot the inflation. We're in disinflation. What are you doing with interest rates, Bailey? Why are you not talking? We're not getting any info out of him. Overnight, we had I posted this in Discord this morning. Overnight, we had a couple of noises coming out of the Bank of Japan. Remember, we hit the 150 level and overshot it. So this is the previous intervention level of 150. We overshot it this week. And typically, as I said, this is when the Bank of Japan start moaning. And they have started moaning this morning. Not moaning, it's more of a grumble, but they're talking about it. So it was either side of an advert. I can't remember where it was. There it is. So Aoki refrains from discussing current FX levels. Aoki emphasizes the importance of a stable FX movement to reflect fundamentals. This is how it starts. Just want to remind the market that it's not on for you to destroy the Japanese yen because it hurts our economy. The more you do it, the more this gets aggressive and the more chances of an intervention move coming there is. So it always starts at the 150 level. However, when and if they do something is always very, very hard to forecast. So just be aware we're in that danger zone where the Japanese at any moment could press the button and collapse everything against the yen, so rally the yen basically. However, we don't know if that's something they're going to be interested in doing now because the economic stance is different now in Japan. It's been negative interest for 20 years. Now it's not. So we'll have to wait and see what the market makes of it. Other than that, no other overnight news. A little bit more coming out of Japan this morning. Nothing else exciting. Yeah. So that's your news. Yesterday we had the existing home sales really was the only thing we got, which was 3.84. We had obviously the CAD rate came out at 3.75. Nothing from the Bank of Canada yesterday in the press conference. So if we go back here, 25% chance of another 50 basis point cut in December, meaning that it's unlikely we're going to get a 50 basis point cut. They are now watching the labour market as the Fed have been because the interest rates are getting down to where they want them to be. So they expect to cut the policy rate further. They will decide on that next meeting based on data. So the upshot of the Canadian press conference yesterday was we are going to watch what happens with the data, and everything seems to be getting under control. So there is no bias specifically long or short from the meeting yesterday. Got 5 minutes to the news. I'm really tempted to just grab this £100 and run with it. Can't now because it's gone. But just there's a good chance we might get a positive number, which means the DAX will drop. So we'll see. Morning, everybody else. Haven't said hello to. Morning, Noob. Morning, Mark. Thanks, said hello to Mark. Tom, a bit of a weird one, but could you set the SIH to 5 minutes before the big news to try and get a big move? Yeah. If you wanted to. You could set it to whatever you want, but you'd use the ORB for that, not SIH. Well, you could use either. Doesn't matter, whichever you want to use. So both of these, you've got inputs for the times. So all these times do is they set the ranges. Yeah. So the pre-market candle close time is 9:55. If you set that to another time, and then the market open time. So basically, what it's doing is it's just using these inputs to create a range. And then it's looking back a certain number of candles from that range, 6 in this case, which is for me 30 minutes. So for me, it's looking back 30 minutes and saying, have we got a range I can find between 10 to 20% of the average daily range? If so, then form that range and take a breakout of it. So you can set these to any time you like. Same with the opening range breakout. Yeah, you can set whatever times you want. Some people have tried to do that. I've got 200 here. I'm going to let it go a little bit. There we go, 220. I'll take that this morning. Considering it's PMI day, I'm quite surprised we've even got that movement. Yeah. So I've just banked half, 135. I'll let the other half run with a break even. So it'll either break even on PMI or it'll run on PMI. If it runs on PMI and we get an ADR hit out of it, happy days. But I'm just protecting that this morning because it's always dicey on PMI figures because you obviously get the volatility coming on the indices. So yeah, you can do that if you want to with either the ORB or the SIHEA. Set any range. So some people are using it for news trading. The problem is with news trading, and this is the problem you'll find when you try and do it, if you haven't done it before, the idea of news trading is you bracket a range before the news. That's a really bad example. Okay, so let's say the news is about to come out. So you'd bracket a range before the news, and when the news comes out, you basically say pending order there, pending order there. When the news comes out, if it goes, it's going to trigger your pending order and give you a lovely profit. The danger is you get whipsaw on the news, which means that you either go long, stop out, go short, stop out, or you just get hedged. But in reality, what's going to happen to you is your pending order is going to be there and your pending order is going to be there. The news is going to come out. It's going to go like that. Your order will get filled up here somewhere because you won't get that level. There's a slippage at news. The reason that candle happens is because there's no liquidity in the market to fill the orders. So they are moving from there, filling order there, and they are moving up to there, filling an order there, and they are absorbing every order on the way. So you will be one of the orders that gets filled in that candle, and it could be there, 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 or there. Your broker will fill you at the best possible price. It's not in their interest to fill you at the best possible price because they won't make money. So what happens is if you put a stop loss on the bracket, so I'm going to go long there and have a stop loss there with 500 risk, for example, what you actually get is an entry there, a stop loss of 1,000 and a TP of whatever, but it's going to be a negative risk reward ratio. That's the reality of trying to trade news. Yeah, you won't get the price you want because the volume. And if the price does not go like that, what you're going to do is probably get something like that, which means you're going to trigger into your trade and go nowhere. Yeah, try it, but do it on a demo account to prove to yourself that it doesn't work. There's a load of courses out there that will sell. They'll sell you courses on how to trade the news. In theory and logic, it's all brilliant. In practicality and reality, it doesn't work at all. Sometimes it will, yeah, and you'll get one. You know, you'll have an order there, and it will go like that, bang, and you'll get filled perfect, and you'll be like, holy crap, this is the best thing since sliced bread. That'll be 1 out of 10 trades. The rest of them will be just slipped to death. Or you just don't get executed. I've had instances where I've tried this in the past, and it gets all the way up there, and I'm like, what about my pending order? Why have you not triggered me? And then all of a sudden it goes, there you go. And I'm like, what do you mean there you go? It's happened. So yeah, so we couldn't fill you to there. I've even phoned my broker about it, and there's nothing you can do. You've signed a contract. When you trade CFDs, it's an important part. When you trade CFDs, news is out. You are signing a contract with your broker to ask them to fill you at the best possible price available. Yeah, they will fill you at the best possible price available in their benefit. Yeah. So look at the spread on this now. Yeah. That's what happens in news. Yeah. So if your order was there, you get filled here because the spread's huge. They spread. And also, the other thing on news, why I'm going on about it, but if you had a bracket there and there, yeah, and price was here, what happens at news? They spread. So what happens is price is quoted there, spread is there, so you get triggered on a long before the candlesticks got anywhere near it, and then it goes like that. So you just lose because the spread triggers your order, although the candlestick quoted, the ask price, never actually achieves it. It's all smoke and mirrors, the whole thing. News trading just doesn't work. So this is bearish euro. Negative news for the first batch. 44 and 48, which means my trade is going well. It's good. So yeah, DAX is rallying because it does the opposite to the euro. So euro is coming down. However, that's not a very big move, as you can see. So it's literally not doing anything. They are spreading the crap out of it, killing everybody, look. But no movement. So that is a 44.5 on a 44.9 forecast. So the number basically is pretty much exactly the same as previous. So although it's come out red, it's a very, very tiny drop, and it's basically the same as we had before. The services is 48.3 on a 49.8 forecast. So they were expecting that to go up substantially, and it hasn't. So that is negative, but that's the services part. Most of the French is manufacturing because it's all to do with cars. So same with Germany. Manufacturing is much more important than services. For the UK, services is much more important than manufacturing because we don't export a lot. Right, so that's the first batch of those in. So if you're on the ORBs this morning, clean break, whether you've taken the 5-minute ORB, whether you've taken a pre-market 5, 10, 15 or whatever, you're long and you're in money. So all going well. Let me just see where resistance is. I'm just going to leave my target up here at ADR at the minute, because if we get negative numbers on the German release, this is obviously the German DAX. So this is going to move more on the German news than it will on the French. So if we do get negative numbers from Germany, there's a good chance of getting an ADR hit on the news today. So I'm just going to leave that in place. Be a nice little trade this morning. Right, FX. So ADRs today, there is one. We've just had one when I came on Euro Pound. Obviously, this is just hit ADR off the news. So that is your only ADR hit today. As you can see, Euro Pound isn't going anywhere. It doesn't go very far very often. So I'm not really interested in this today. The thing you got to worry or bear in mind with ADR hits on PMI day is you've got constant news throughout the day that's going to affect these. So this will be back up here potentially in the next half an hour. If the German numbers come out the opposite, we're going to be back up there. So if the German numbers do come out in the same direction, we'll be back down testing last week's low at 150 ADR. So bit dicey taking ADR hits today. You've got a weekly which hit yesterday, Swiss yen, which is the one that I'm in. So this thing went parabolic. So we had a parabolic move, which I got into at 200 ADR. We then pushed up a little bit the next day. Yesterday, we had another one. So this Japanese yen, this is why the Japanese are screaming and shouting, mentioning this morning in Financial Juice, they're unhappy. That's 200 ADR, actually more than 200 ADR. That was nearly 225 ADR. That was 175 ADR, which is why I got in. Whenever I see a 175 or a 200, the probabilities of the pullback are incredibly high. Yeah, you're looking at it's 3% of the time we get beyond 200 ADR. So when you get there, you've got a 97% probability of price not going beyond that level. Doesn't mean it's not going to accumulate, which it did. So I took it because I was like, let's have a go at a yen short. It's not going anywhere, so it's likely to go up and down. And then yesterday we had a 200 ADR move. So I've managed somehow to get into 3 positions within 24 hours on this thing. It's coming down nicely today. I'm about to get back to break even, which is great. My target is previous day's high. So I'm looking for the propulsion move from yesterday's to be an A-shaped recovery. But that is your weekly range hit as well. So if you did get on that, that was when you hit your weekly range yesterday. Where are we? Thursday, Wednesday, Tuesday, Monday. So there's Monday. Obviously, we had the 175 ADR followed by nowhere, followed by a 200 ADR. So that is your weekly range done within 3 days, basically. So they're unraveling that now. So that's good. All the other yens, as you can see, are sitting around a little bit. So they are coming down as well. But yeah, actually, they are all coming down pretty strong. So yeah, it is an unravel. So yeah, it's just a profit take on that leg. Whether or not they're going to continue, we'll have to wait and see. So we'll see what happens with that one. But that's your weekly and that's your ADR today. All of the RSIs yesterday were lit up like a Christmas tree. Every single yen pair was a 4-hour and or an hourly RSI extension, as you can see, and they're all playing out. So if you took any of the RSI extensions yesterday, you're probably in profit on those. They didn't all get very extended, but they all got quite extended. So so nice ADR reversals from yesterday. Sorry, RSI reversals from yesterday. But there we go. Let's have a look at the euro and just see where that's going now. Morning, experts. I don't like that candle. Which candle? I've shown a lot of candles. Which candle don't you like? Perfect example of spreads during news. Yeah. Your broker is there to take your money. Do not think he's trying to do anything else. That is his job, taking the money out of your account. He will do it by any means possible. Or let's say I don't like the numbers that came out for the euro. Yeah, not great. We'll see what the German is. The German obviously could well just completely cancel that out. And we end up back where we started. But the euro overall at the moment is kind of neutral now. So Lagarde obviously has been saying quite a lot. We actually had quite a bit of oh, there you go. I was just going to say we had quite a bit of news yesterday out of the ECB, sort of saying that they are more data driven now, but they can't see much more cuts coming this year. So traders favour a 0.5 point interest rate cut in December, meaning that November will be a pause. So because we're looking probably to pause rates now on the ECB, the likelihood is it will just sit there and flip-flop around, basically. So if you go back to yesterday, ECB's Panetta, inflation is to hit the target much earlier than the end of 2025, which we know. I can't exclude that the ECB must go below neutral. I wouldn't take it for granted we will stop at neutral rate. What does he mean by neutral? I presume from neutral he's talking about, I don't know, what they class as a neutral rate? Not terminology I've heard before. But obviously they've overshot inflation, so it's in their interest to get this down. that being down below 3% by end of year is probably on the cards. However, this is going to bounce. Yeah, so this 0.5 is not going to maintain that rate. It's going to bounce. So they don't want to go too far, too fast, because that will cause a bounce followed by a bounce. So it's a balancing act between the two. And I think they're actually where they should be with it. Possibly another 0.25% short lower, but we've got 3 months for that to come in. So the market's not going to be bullish, particularly on the euro, but there's no reason for it to really be bearish either. So neutral. You should be able to trade euro really in either direction at the moment. More of a bearish stance. I think the bear moves will probably happen faster, but you can kind of see the markets, apart from this is US dollar, but the market's fairly neutral on the euro, and I think that's probably the way it's going to stay for the rest of this year. But they will factor in probably a 0.5% cut as long as the inflation numbers don't come out ridiculous, which means you'll just kind of grind very slowly down. But within that is going to be this. So you can trade in any direction on it. Euro US dollar, however, obviously, is another matter. This thing is it's the US dollar's off its head. Really is. Bizarre. So we got the US dollar figures this afternoon. I could really do with some positive German PMIs followed by some negative US PMIs. And I'll be out of this today. Would be lovely, but stuck at the minute. German economy is struggling. I'm German. We're not doing good. Yeah, but interest rates aren't really anything to do with economy. So the decision-making process with what they do with interest rates is to do with the economy, GDP specifically, but it's more to do with controlling inflation. So if things aren't going well, you need inflation under control and you need interest rates low, because at the moment what you don't want to do is encourage saving. So the higher you have interest rates, that encourages people to save money, but it's a double-edged sword. So if people save money and don't spend it, the economy drops. Yeah, because if you're not spending your money, businesses aren't making money, therefore your GDP and your economy drops. If you've got low interest rates, people can borrow money, so you're encouraging spending, which drives the economy up. So it's in their interest to get the interest rates down, but getting interest rates down causes inflation. More money you spend, the more prices tend to rise. So it's a balancing act between the two, and trying to keep the economy stable. Which is a very, very hard thing to do, especially coming out the back of a pandemic when every country on the planet has got more debt than they've ever had in existence. Yeah, so we're massively in debt everywhere. Our economy's all collapsed, and the price of everything's gone through the roof, all at the same time within 2 to 3 years because of the Russian invasion. So it's a horrible, horrible time at the moment to be trading, because the market is just in flux. So one day it's that, the other day it's that. And you've seen it by all the talking heads. We've been watching the Fed. We watch the Fed every day. They change their mind every 5 minutes because data is all over the place. Nothing's stable at the minute. It's a very weird time. Now we've got North Korea in Russia helping them. That throws another massive spanner in the works, doesn't it? So German PMI 42.6. German PMIs are positive. That's good. So positive numbers for the German PMIs, which means my DAX will probably come down. It's not moving much at the moment. So positive on the manufacturing, see what the services are. That's a good hit as well. So that's 2% up. 1% up on services. So good news there. So euro, again, as I said, now we're going back the other way. Yeah. So euro US dollar now going completely turtle. There we go. So big rally there. So the combined, which comes out at 9 o'clock, will include all the other European member states. And obviously this is a 50-50 at the minute, so that could be positive, could be negative. So that cancels out the Europeans because it's a double positive and it's more positive than those. They are also the bigger economy of the two. So that's overall bullish. So I would expect this number to come out green as well, which is going to be bullish euro today. So the DAX is probably going to struggle to get a little bit higher today because obviously this tends to do the inverse of the euro. FTSE's gapped up, look. It's interesting, isn't it? The FTSE gaps up on the German news, yet the DAX doesn't move. Go figure. Bizarre, isn't it? How these markets work, it's all very, very weird. Right. Not a lot of movement on there. Excuse me. Second part of that's locked in anyway. I've got £500 on the table, so in fact I've got 650 on the table. Still rallying. I'm just going to drag stops up just to lock a little bit more in. I'm just going to put it right under that 5-minute candle because I'm worried about this dropping. I'm going to take half this off as well. I'll leave the stop there at break even on it, but that's nice, easy, clean morning, isn't it? For the indices. Right. So FX wise, there's nothing else to look at today on RSIs. RSIs are flat completely. There's no hourlies, no 4 hourlies. Obviously today is all about news. We've got PMIs released all day long today. So 9 o'clock we've got that one coming out. 9:30 we've got the pounds. Then we go into unemployment for the US, followed by their PMIs, and then Bailey later. So there's a lot of news today. So potentially we've got a lot of volatility coming, but it's going to be spread out. So we'll have to wait and see which way everything goes today. What is an ECN broker? What's yes morning? What is an ECN broker? Well, ECN is a connection type. Google that one. Someone mentioned this morning about they were in a trade on, was it the Singapore dollar? Yeah. So someone said this morning that they were trading the US dollar, Singapore dollar. And I basically said, don't trade exotics because they have big spreads, loads of slippage, and there's just no point because they're all pegged. So the US Singapore dollar, just to explain, used to be pegged to the pound because we had an awful lot of banking we still do in Singapore. So all the UK banks were in Singapore, and there was a lot of confluence between the currencies. So we were pegged to the Singapore dollar. So when you're trading an exotic like the Singapore dollar, what you're doing, if you go long on the US dollar, Singapore dollar, you're basically shorting the pound US, or you were back then. They then unpegged to us and pegged to the US dollar, and then they unpegged the US dollar and they pegged to a basket. And a basket basically is just a combination of different currencies. But at the end of the day, when you're trading exotic pairs like the Singapore dollar, you are trading another currency. Yeah, you're not trading the Singapore dollar because the Singapore dollar moves up and down with another currency. So you're actually trading the same thing. And this is the reason we trade just these majors and minors. Yeah. So the reason these are the ones that virtually all brokers have, and a lot of brokers won't even list exotic pairs, is because the exotic pairs will be will have a confluence with these ones. Yeah. So if you look at the US dollar, Singapore dollar, I don't even think I've got it on here. I might have it on my other account. I've got Singapore dollar here. No, see, I haven't got it. But most brokers just don't give it to you because it's the same as another one. Yeah. So just try and avoid exotics, because exotics have many, many negatives and there isn't really any positives. So they have higher spreads virtually all the time. The spread on it will be, if you look at the pound US dollar or the euro US dollar, and then you look at the Singapore US dollar, the spread will be like that. Yeah, it'll be huge. The slippage. So you'll find that the candles gap because there is no liquidity, because big institutions aren't trading exotics. And there's not a lot of volume going through them. To get from that price to that price isn't a tick, it's a jump. So you tend to get slipped when you get an order placed, and you get these big candles that go in for no reason whatsoever, and it's literally just slippage. So there is a Singapore dollar conversion needing to be done. There's no one to take the other side of it, and you can't sit there and wait. So you just basically place the order and it slips the market. Also, you tend to find the overnight swaps are quite hideous, because inflation on exotic currencies can be ridiculously high, meaning interest rates are ridiculously high. Look at the Russian ruble. We're at 25%. Yeah. So the interest rate differential between the Russian ruble as an exotic, for example, and the Swiss franc is 24%. Your swaps on a Wednesday, if you're the wrong direction, are going to hurt a lot. It's just not, they're not practical to trade. So just a word of warning, be careful of trading them, basically. My German broker has 57 pairs. Yeah, so I mean, there's lots of brokers have lots of pairs. So on my DarwinX account, I think DarwinX, I've got them. Yeah, see DarwinX, look, I've got them. I can trade the SEK, Swedish krona. I can trade the Norwegian krona. I can trade the Mexican peso. Singapore dollar. There you go. US dollar, Singapore dollar. I can trade the Turkish lira. All kicking off in Turkey as well, isn't it? Terrorist hit there yesterday. So, yeah, but there's just no point. There's just no point in trading them. So be careful with them. I did go into them. I used to trade the try because it moved really massively. But you realise when you're on the wrong side of it, it moves really massively. So it looks good on paper, but in reality it hurts. An ECM broker does not hold positions, meaning they will never take a position against you. They offer raw spreads, trading, and charge commission per transaction. Yeah, there we go. Nick, well done. You Googled and answered your question. Euro US dollar 1 hour candle just took out stop losses. If you believe in that, that 1 hour candle did take out stop losses, but not intentionally, because brokers don't know you exist. Sorry, banks don't know you exist. Travel, you need to come into the members streams. We've got a member stream specifically explaining how this thing moves. It's a very interesting one. If you want to know why this moves and how this moves, there's a stream about that. Actually, that's not the best way to go, is it? There we go. That one. It's 1 hour 20 long, but it will teach you everything you need to know. And every time you see a conspiracy theory video about stop runs and things like that, you will go, rubbish. Some back tests on DKK was decent with Position Trader. Yeah, I mean, the thing is, you'll get back tests as well, right? So if you back test an exotic, don't forget, when you're back testing, you specify the spread. When you're back testing, you can make anything look good with a 2-pip spread. Try trading the DKK and see if you get a 2-pip spread. So you need to adjust that to something like, I don't know what it is on it, but something like 30. That's what you're going to get. Then see if that back test is profitable. It's not going to be profitable. You're not going to get the the same spreads, unfortunately. Right, that's all I've got for you today. If there's any pairs anybody wants to look at, let me know, and we will look at some pairs. But I've got nothing else really to cover today. There's no alerts anywhere. We're waiting for the PMIs to be released today. So this morning in the members stream, it's scheduled in to be daily strategies. So I am going to go through theory of daily strategies, logic of daily strategies, why daily strategies are good, what the good points, the bad points, and everything is about daily strategies. But the EA and the testing that I had planned, I can't find the EAs. I've deleted them, I think. So I can rebuild them, but it's going to take me time. So what we are going to do is a daily strategy that Phil has come up with, who is a member of the members streams, I think. Although I haven't ever seen him in the members streams, I don't think. But Phil's come up with a really good strategy, which is a daily strategy. And I've built an EA specifically to test Phil's strategy. And it's good. I like it. It needs a bit of work, but it's good. It works. It's got a nice equity curve. I've never tested it on this pair, so I don't know if this is going to give a nice equity curve or not. But yeah, so yeah, it's good. It's a good strategy. But it's got some problems we need to iron out. So we're going to look at this because this is a daily... Oh, Phil, he's there, look. Phil's there. So this is a position trading strategy. Yeah, and basically it's a variation on what I do, position trading, but using a specific entry criteria. Although there are bits that need to be ironed out, which can be ironed out very easily with low lot sizing, possibly martingale, possibly some kind of drawdown control, but there's a discretionary element to it as well. So we're going to look at this today because it is a daily strategy, and it's very similar to most daily strategies in that the reason they work is because it's daily. You are ironing out, when you trade a daily strategy, all the chop, basically. So all the crap that happens intraday, news events, algorithmic trading, contraction where it doesn't go anywhere, slippage, it's all gone because you're literally only using one time of day every day. You're ignoring everything that happens intraday, and every day you're looking at the time frame. That's it. So they're great strategies for people that work full time because you literally only have to look at your chart once a day for 10 minutes, if not even 10 minutes, 5 minutes. Yeah. So you can execute daily strategies manually with no automation, except if you want to back test them properly, then that's where automation comes in. So you can find out what the pitfalls are that you need to iron out. But we're going to look at that today because it's a fairly good strategy. There's variations on it I think we need to look at, Phil, but we'll go through that because it's a goodie. And it's very similar to the position trading strategies that I use at the moment. But I think with stop losses we can use with this strategy as well. So we'll do some playing. Yes, I did, because the way you spoke before, you kept saying your broker is taking your money. My broker's not taking my money, no. Brokers take your money. Yeah, your broker's job is to take your money. It doesn't matter if they're an ECN broker or not, Nick. Their job is to take your money. Yeah. An ECN broker, right, is not giving you raw spreads. Go and look at an ECN broker and tell me that didn't spread on the news. It did. Yeah. All brokers are the same. Yeah. They lose 60% of their customers because they lose their money. I think you need to, not be nasty, but you need to wake up. There isn't a broker on the planet. Go and speak to Tom Hugard about it. He used to work in a brokerage, ECN brokerage. Yeah. They do take the other side of your trade. They do. There's software they have that tells them what to do to get your money out your account. But their job is to make you press the buttons. So even if they're not taking the opposite side of your trade, their job is to get you to press the buttons. That's it. Executing your orders into the dark pools and things like that. Yeah, right. Not happening. This industry is very cloak and dagger, but there's lots of things you can find out if you know where to look. There's videos out there that explain exactly how brokerages work by the people that sell the software. Yeah, so all the brokerages have software platforms which allow them to calculate how much money they're going to make at each price point. Yeah, so they have software that says, right, the euro is here. Yeah, if the euro trades there, we make that. If the euro trades there, we make that. If the euro trades there, we make that. And there, and there, we make that, and that. They have a button at each of those levels, which they can press to spread the market. Yeah. I know this how? Because it's all on YouTube, right? The reason I know all of this is because all of the people, the software system suppliers that do these, create sales videos which explain how this all works. It's all on there if you go and look for it. Yeah. And I know people that work in brokerages, have worked in brokerages. Yeah. It's not, there's thousands of people that work in places. There's no secrets anywhere in this industry. All the information's out there. This is how they work. Yeah. So when you see a spread at news, that spread is not being created because there is a lack of liquidity in the market. There's more liquidity at the news than ever. Yeah. The news is where there is $7 trillion a day go through this market. Yeah. 50% of it goes through on news events. Why would you spread the market when there's more liquidity available at every single tick than there is at any other time of day? Because you can make more money. Because if I'm going short here and my stop loss is here, I can spread the market there to take that money because I'm taking the opposite side of your trade. If you're long and in drawdown by $100 and I close your trade out, I get $100. Simple maths. And it's simple. That's how it works. Yeah. So this is what people have this theory about. Oh, they've run the stops. Damn right they've run the stops. Why wouldn't they? Because they make money. It's their job. Brokers make money in three ways: spread, swaps, and commission. This button here, right? Every time you press that button, they make spread. If you hold the trade long enough overnight, they make swap and they make commission. Every time you press that button, they make that, and that. That's it. That's their job, to get you to press that button. They all give you free training. They all give you free systems and strategies. They all encourage the use, and some of them even give away expert advisors. Why? Because those things make you press the button. They all encourage you to trade small time frames and teach you strategies that work on the 5-minute chart. Why? Because you'll take 10 trades a day. Every time you get stopped out, you press that button. Yeah. If you press that button enough times, you'll lose 60% of your account within 60 days. Yeah. And 60% of traders do that on a regular basis. So if I have 60% of traders losing 60% of their account in 60 days, what I need to do is take the opposite side of their trades, and I've instantly got a 10% edge. They make more money than a casino. You can make more money walking into a casino than you can into a brokerage. Your edge is 40% with a broker trading. Your edge is 50% in a casino. Actually, it's 49. Yeah. Don't be fooled. These brokers are not your friend. Read your contract. Your contract says, and you've signed this, it says, I authorize you to execute my orders at the best possible price that you can achieve for me in the market I am trading in right now. Yeah. The best possible price they can achieve is wherever they can fill your order. They fill your order. If they think that's the best possible price at the time, that's where they will fill you. Yeah. I haven't got any examples right now, but if you go through the Discord or the Telegram group, you will find plenty of examples of me having a trade with my stop executed here, right, on a short order, and price trading here. Yeah, this swap here, they spread the market anything up to an ADR at night just to gather all the stop orders. Yeah, but you will never see it plotted on your chart. And you'll phone them up and go, "Oi, why did you execute my order up there?" And they say, "Well, that's the best price we could get for you. You had a stop loss way up there somewhere, or wherever it was. No, you had a stop loss here, right? But that's the best price we could get. But price didn't trade there. Yeah, but that's where the liquidity was overnight. Prove me wrong." You can't prove them wrong because you have no access to the liquidity, and you asked them to. You signed a contract asking them to execute your order at the best price possible. At midnight, the best price possible was up there as far as they're concerned. You must have had this. You must have had an order executed at a price where the candlestick's never gone anywhere near it. Yeah, there's buttons in their software at every price point that says, press me here and you'll make 1,000. Press me here, you'll make 1,500. Press me here, you'll make 2.5. And you'll also margin call that guy, which means you take half his account away. Press it. That's your job. Their job is to report commission every day, and they get paid a cut. Go and find someone that's worked in a brokerage. Put you off trading for life. Why do you think I don't use stop losses? Mental. You're just basically giving them your money. New Zealand dollar, US dollar, US dollar CAD. Oh, hang on, I'm catching up now. I've got to go in a minute because we're doing the member stream. Yes, I did because US dollar CAD. How can we forget about that? US dollar CAD. So US dollar CAD. Yeah, we got a nice reversal alert overnight. So yesterday, obviously, we had the interest rates, and basically market spiked and came back down. So we've got the reversal. So we're looking for a break of yesterday's low and the previous day's low, which is here. So if we can break those two levels today, negative US news, negative unemployment, or rather positive unemployment. So we want unemployment rate to go up, and we want the PMI figures to be negative. We'll be down here. So yeah, just waiting on the news basically, but we're waiting for the unwinding of this propulsion move. So yeah, just waiting for it to unravel basically. New Zealand dollar, US dollar, longs on that one at the moment. So yeah, same thing. It's US dollar. So we're just waiting for the US dollar to waiting for them to unravel the percentage of this US dollar move that they need to unravel. There's no reason why this US dollar should be bullish at the moment. They are way up. They've dropped the interest rate by 0.5%. Inflation is still coming down. It's nearly at target. They've got to get this down, which is bearish. Yeah, they've got to reduce this. So, there's just no fundamental reason for a rally on the US at the minute. So, don't know. But anyway, longs on that at the moment. It's starting to unravel. So basically yesterday we've had reversal alerts on all US dollar pairs. So move is underway. So looking for a pullback retest and for a structure break and, change in direction basically. But we're going to need some news. Last week was awful because every single piece of news last week went the US's way. So we need some unraveling news basically to get things kick-started. Hopefully today. That would be nice. Can you provide a YouTube link to a video explaining brokers' methodology? I can't remember. It's called Gold. Never remember what it's called. It's called Gold something. God. Hey, look, it's me. It's in. I've posted it loads of times. It'll be in the Telegram channel. I can't remember what it's called. I have to try and look it up. I understand all that about spreads and rollover. I just don't know why the orders are placed in the central interbank market, because you can't, Nick. Most of the banks' trades are OTC. They never hit the open market. This is all explained in the video that I did on why the market moves and how the market moves. Yeah. The vast majority of Forex transactions, specifically Forex transactions, not futures. Futures all goes through the CME. But all Forex, well, not all Forex, but a lot of Forex orders are OTC, over-the-counter transactions. So Barclays phone HSBC and go, I've got 20 million long US dollar yen. What have you got? I've got 25 million short. Brilliant. I'll take that 20. That 5 then goes into the open market. You don't see the 20. Yeah, so you can only execute with the market maker desk with the 5 that he's got left. Lots of news today, yeah. They say the orders are placed there, but you say they are not. What orders are placed where? There are some. How do I put this? You're worrying about something that you haven't got control over, right? It doesn't matter. Yeah. What you as a retail trader have is the ability to sign up with a broker who will give you a spread and give you buttons to buy and sell. How it happens, why it happens, what goes on under that hood has got F all to do with you, me, or anybody else, because you have no control. Yeah. Understanding the mechanics of a brokerage is not going to make you a better trader. It's not going to help you any way, shape, or form. And it's not going to help your decision-making process with any broker, because they all do the same thing. There is no car dealer in this planet that doesn't offer a 3-month warranty on a used car, because that is the industry standard. In brokerages, the industry standard is to take the other side of the trader's trade until they become unprofitable. Then they switch you from the A book to the B book, and they just take commission, spread, and swap from you, but they do not take the other side of your trade. They farm your order out to dark pools where they execute the orders with the market makers within central banks. That's how it works. You don't need to know it, because it doesn't affect you. There's nothing you can do about it. You can't say, I do not want you to take the other side of my trade to your broker. They will go, no problem, we won't. Prove it. You can't. Doesn't make any difference. Is it going to make the difference? Are you going to suddenly become more profitable because you've got a broker that doesn't do something? No. Doesn't make any difference. Forget about it. People worry so much about the things they can't control. You can't control price. Stop worrying about it. Just press buy or sell, because it doesn't matter whether you get in because of a moving average, a MACD, a stochastic, an RSI, a signal arrow, a reversal alert, a moving average crossover, or your dog crapping in the wrong corner of the room. None of that makes anybody profitable. You can flip a coin and make money, and I've proved it. Yeah. The broker is just a vehicle for you to access the markets. You have no control over anything that they do. Yeah. If they want to spread this by 2 ADR this afternoon on the PMIs, they can, they will. And when you phone them up and say, what the hell are you doing? They'll say, you signed a contract. We spread the market because that's where the liquidity went. Prove me wrong. You can't, because you can't access the liquidity or the systems they're using. It's just the way it is. So if you've got, don't worry about it, honestly. But understanding that the way that they work helps you in the fact that you realize that you have no control over this market. What this does is out of your control, because there's only 2 ways it goes, up and down, and it's all controlled by central bank volume. That's it. Whatever's left, however it's left, why it's left, is what moves the market. But the volume of orders today is random and generated by 10 central banks and institutions that will just move orders. The volume of orders decides whether it's a bull or a bear candle. There's nothing else going on. Yeah, I explain it all in detail for an hour in one of the member streams. It's in the Bootcamp as well. As Pot DJ just said, it's in the Bootcamp. I explain it day 1 Bootcamp. There's a full explanation of how the market works. Well, it's not actually, it's a smaller version of it, but it's all you need to know. You don't need to know anything else. It's just You know, it's like saying I want to drive my car down this road and there's a load of traffic lights. I want to ignore the traffic lights. You can't. Sorry, you don't have a choice. Another place where brokers tend to win is when they roll over a position. In futures, maybe. Yeah, I don't know. Doesn't matter, does it? It really doesn't matter. All I know is if you use a stop loss, you won't make money. That's it. That's all I know. Because if you use a stop loss and you hold a position overnight, there's a very high probability it'll get stopped out and you'll lose money. That's it. So if you use them, you die. If you don't, I don't. That's it. That's all I've ever found out. Been doing it 17 years. All I know is that's the one rule that you don't want to follow. Put in a stop loss nice and tight underneath the low. Never going to work. Morning Blue Trader from Pontevedra. It's actually sunny for a change. Right, I've got to go because the member stream's starting. So if you're coming into member streams, I'll see you in 5 minutes. We'll have a look at the daily side of things. Yeah, time's up. There is a strategy we want to look at, exactly. Yeah, I'll be back tomorrow. Obviously, beware today. Market's going to move on the news depending on what happens. So there you go. There's your euro. So euro came out as neutral, because it does what they do. So it's slightly bullish on the euro side, very slightly bullish on the euro side. So not really a massive movement today, although the euro's picking up. So we might get a move started on the euro. I'm going to close that DAX out. It's 430. Putting it in the bank. I'm going to tighten up my FTSE as well under that propulsion gap because it looks like it's going bare. So, yeah, nice profitable morning. All right, so I'll be back tomorrow at 8 o'clock. And if you're coming in member streams, I will see you in 5 minutes. Have a good day. Anything else you need, Discord, and I'll be in there. All right, have a good one.